Assalamualaikum students. In today's video, we are going to discuss a past paper for employment income. This is in the Kaplan revision kit question number 99. The name of the question is JASON. Okay. So first of all, we are going to read the requirement B. B requirement is calculate how much more income tax JASON will have to pay for the tax year 21-22 if we take up the offer of employment with subsequent PLC rather than remain employed by initial PLC. 11 marks. No need to calculate national insurance contribution. We know that exempt benefits we have to show 0 or exempt. Now, very interesting question, very important question. In this question, they are asking you that either Mr. JASON needs to accept the offer of subsequent or no. Means he is employed with initial PLC and he got an offer from subsequent PLC. So in order to find out, we have to calculate employment income under both circumstances. One is initial PLC, employed with initial PLC, what is his employment income? And then we are going to calculate for employee as a in subsequent PLC. Okay, so just go through the question. JASON is currently employed by initial PLC as a sales manager. He's not a director, he's just a manager. Okay, considering to resign on 14th March 21, which is in our tax year, and take up the offer from subsequent PLC 15 March 21. He's going to join over there. If employed by subsequent PLC, JASON will receive a higher base salary, more benefits compared to his existing job. However, JASON wants to know how much more income tax he has to suffer during tax year. So we are going to find out. First of all, just see initial PLC. Employment income, we are going to calculate employment income. Initial PLC, okay? Now, what is his salary? We can see in the question, it's written, it's mentioned. Note number 1. Please read note number 1. Okay. Annual salary is mentioned 180,000. Okay, fine enough. Then JASON will contribute 8,000 to occupational pension. We know there are 4 allowed expenses. One of them is occupational pension. No working, the employees contribution need to be deducted from the salary. So it's 8,000. Just we deduct that one. Next one, number 3 is the bonus. Okay, bonus needs to be added. Bonus needs to be added. And he is a manager, not director. So earlier of date of entitlement and date of receipt. We know there are a lots of dates. Date of payment means date of receipt. 2 bonuses are there. So 30th April 21 and 30th April 22. Date of entitlement 15th March 21, 15th March 22. Bonus 1, bonus 2. We are going to select the earliest one. So the earliest is this and this. So March is the earliest date. We are going to match them in our tax year like we learned in our classes. Today we are practicing the past paper. So is it yes or is it yes? In this, which date falls in the tax year? So the first one, check. The first date, bonus number 1, 22,000. Is 15 March 21 fall in the tax year? Answer is no. The second date, 15 March 22 fall in the tax year? Answer is yes. So bonus, working reference, and the amount 15 March 22 is 24,000 pounds, which we are going to add in the format. And bonus of 22,000 will not be taxable in 21-22. Okay. Then note number 4. Throughout the tax year, JASON was provided with free meal at in initial PLC staff canteen. Please recall your memory. We learned that staff canteen is an exempt benefit. So that's all. Employment income under initial PLC, we found out 180 minus 8 plus 24. So it's coming 196,000. Any questions you can ask me through WhatsApp. Now we will solve this question. We will continue it with subsequent PLC. Note number 1. If JASON, employment income we are going to calculate, annual salary. Note number 1. If JASON takes up the offer from the company, he is going to get a gross salary of 205,000 during tax year. Okay, full amount. MashaAllah, good salary. Then number 2, subsequent PLC will contribute a total of 9,000 in the occupational pension scheme. Okay, occupational pension is an allowed expense when if employee paid. But here, who is paying? Employer. So it's an exempt benefit. Just go through the handouts. It's written pension paid by employer is an exempt benefit. Sir, you told us occupational pension is an allowed expense. Yes, I did so. Occupational pension is an allowed expense if it is paid by employee himself. But if occupational pension is contributed by employer, it's not your expense. It's a benefit and it's an exempt benefit as per our handouts. Got my point? Note number 3. Throughout, he got hybrid electric motor car. List price is given. Okay, and the CO2 is 25. So we know that if up to 50 grams, then the electric range will apply. So car benefit 62,500 into percentage, and the CO2 is less than 50 grams. So electric range will apply, and you can say this electric range of 25 miles. You can go in the handout or go to the rates of your textbook or this revision kit. You will find out that if electric range is 25 miles for hybrid electric car, the percentage will be 13%. We learned that how to check it out. Please check. You found out 13% in the rates? If yes, good. If no, you must revise the topic car benefit. Okay, I already sent you the videos for car benefits as well. So the answer is 8125. Next one is not provided fuel, so no fuel. Then 6th April till 31st July. How many months? April, May, June, July. 4 months. Accommodation is provided by company. Okay, accommodation working. Purchased by company for 140,000 means it's an expensive accommodation. 75,000 greater cost is greater than 75,000. So we are going to calculate additional benefit. Value, market value is 285. Improvement is 17,000 in August 19, yani before tax year. Annual value is 4,800. Actual rent is not given at all. There is no actual rent. Okay, now we learned annual value, actual rent, higher of. So the annual value is 4,800. Actual rent is 0. So the higher of is 4,800. This is my normal benefit. Now, additional benefit. Additional benefit. Formula is this. Here, we can take cost or market value. Sometimes we took cost, sometimes we take market value. The rule is 6 years rule. The rule is 6-year rule. If the accommodation is 6 years, past 6 years, then we are taking market value, or less than 6 years, we are using cost. So you can see the company bought it in 2011 and provided to this guy in April 21. So it's more than 6 years, greater than 6 years. So we are going to take market value, and when, if we are using market value, or when the market value being used, the improvement and cost will be ignored. If we are using cost, means if the 6-year rule says it's less than 6 years, we are using cost, and in the cost we are adding all the capital expenditures like improvements incurred before the tax year 21-22. But in this question the case is greater than 6 years, so we are using market value. Just use the calculator and we will get something. 285,000 minus 75,000 into 2% is 4,200. Total will be 9,000, and we already discussed that is provided only for 4 months. So 4 by 12. The answer is 3,000 for accommodation. Hopefully, this video is helping you in revising the old concepts. Note number 5 is a beneficial loan. The definition of beneficial loan is, if a loan is provided to an employee less than 2% or interest free, it's it's a beneficial loan. So see, interest free loan is provided on 1st August. Okay. 6th April 21, 5th April 22. 1st August 21, the beneficial loan is provided. How many months? August, September, October, November, December, January, February, and March, 8 by 12. There is no repayment, so we are not supposed to use strict or average method, just simple is 140,000 is the loan amount. We are saving 2% for 8 months. The answer is 1867 round. This is the answer, and 217992 is our employment income. So this is the answer. What we can say after that, because he's asking us, no? So after this, you have to write one paragraph. What will be the paragraph? You can see JASAON income is more than 150,000 in either case. If he is employed with initial, he is earning 196. If he accepts subsequent PLC, he will earn but 270. Means he is, in both cases, he is a higher taxpayer. Higher taxpayer is paying tax at 45% on the incomes above 150,000. So you can see, if currently he is earning 196, and if he accepts the offer of subsequent, he is going to earn 217. So 217992 minus 196,000. The excess amount will be taxed at 45%. So how much additional tax he has to suffer? Just use the calculator. 9896. This is a very important 1 mark for writing this all and calculating this additional tax amount. That JASAON is an additional taxpayer under both cases, both scenarios, initial PLC scenario or subsequent PLC scenario. So if he is going to accept the offer from subsequent PLC, he has to pay additional tax of 9896. Simple and easy. So this is the question. Part C. If Jason decided to resign as an employee of initial PLC 14 March, briefly explain which form he need to fill. If I am an examiner, I will not tell you P49, but examiner is good guy. That's why he's writing for you that you must describe form 49. Okay. So what is form 49? In the handouts which I provided you, it's mentioned a lot of form numbers. Form P11D, form 60, form 45. So what is form number 45? So you can check in the handout as well that what is form number 45. Here it is in yellow box. In yellow box. Given to employee on leaving. This is the form Jason. Form 45 will show Jason taxable earning and his income tax calculation up to the date of resignation, okay, which is 14 March 21, together with the tax code. And Jason will give a copy of this form to his new employer, which is subsequent PLC, so they knows that what the history of Mr. Jason employment income and income tax. So that's all for this question. Please practice this one by your own. Try to do it one more time and try to do this question number 100. Take it as an assignment, Martin. This is a good question on employment income. You will not be able to calculate taxable income because here is other incomes and partnership. So just solve note number 1, 2, 3, 4, 5, 6, and 7. Yani just calculate for me employment income and send it to me WhatsApp. I will check and I will give you feedback. That's all. See you in next video. Allah Hafiz.